Let's now proceed to the stock analysis. Here you will see the statistical data of SM Investment Corporation, including its valuation metrics, long-term performance, as well as the major risks and strengths that influence its overall investment outlook. Just to make it short, SM Investment Corporation is one of the strongest and most stable companies in the Philippines. Its stock is currently undervalued but continues to show steady and long-term growth. The company provides regular and increasing dividends, providing its good financial performance. It is mainly owned by the C family, showing strong leadership and commitment. The C family controls 43.69%, and its diverse business help manage risks from the economy and climate.
SM Investments Corporations, listed on PSE, remains fundamentally strong despite its share price falling 25% from its 52-week high, with a PNE of 10.6 and PNB of 1.3 to 1.4. The stock appears undervalued, supported by stable dividends of 13 pesos per share and a 20.95% 5-year dividend growth. Its diversified portfolio, however, low debt, and strong C family ownership ensure stability through economic pressures and climate risks that pose future challenges.
So the SM investment is listed on the PSE as the SM has a 10 pesos par value and over 1.2 billion shares outstanding. Its current price is 735 pesos, which is down from its peak, but it still shows strong long-term growth over the past 5 years, with a P ratio of 10.6 and PB ratio of 1.3 to 1.4. So the stock is considered undervalued, making it attractive to investors. It also provides 13 dividends per share with a steady growth rate over 20% in 5 years. Backed by a diversified business, load up, and 43.69% C family ownership. So the SM investment remained financially strong and stable despite facing risks from inflation and crime impacts.
SM Investments Corporation fixed rate bonds showcase its strong financial standing and credibility in both local and international markets. Rated AAA by the Philippine Rating Services Corporation, these bonds are considered highly secure and dependable investments, issued in both peso and dollar denominations. They offer stable returns and predictable income through fixed interest payments. The bonds have also received international recognition for their excellence and sustainability, reflecting SMIC's commitment to responsible financing and continued investor confidence in its long-term growth and stability.
How does SM investment keep investor trust despite high interest rates? It's because of its strong credit rating and conservative financial strategy. So the company limits borrowing and relies on internal funds, which keep its financially stable. Also, additional, why do bondholders stay confident? It's because the SMIC has steady cash flow and diverse business operation which provided to meet the obligation even in tough times. That's why the SM investment remains a reliable and trusted choice for the bond investors.
So the company's 15 billion pesos fixed rate bonds were quickly taken up by the investors, which indicates high market confidence in SM investment credit standing. The bonds are also rated AAA, which means that these are considered to have very low risk and reflect a strong financial commitment of SMIC to meet its obligations. In 2024, SMIC returned to the international dollar market, reopening its $500 million bonds that recognizes the country's capital markets deal of the year. Furthermore, the bond issuance of the company were managed by reputable investment banks, further supporting the credibility and stability of the offerings. Investing in bonds involves market risk, where bond prices fluctuate and affects liquidity, and interest rate risk, where rising rates can decrease the bond's values. So, investing in bonds from SM Investment Corporation appears to be a sound decision for investors seeking stability and low credit risk. The company's strong market position, Excellent credit rating and recognition in both local and international market make its bond attractive.
Awesome Investment Corporation raises funds through both stocks and bonds to fuel its growth and daily operations. Issuing stocks helps strengthen the SMIC's capital base without the need for repayment, while bonds offer a cost effective way to secure a financing at fixed interest rates. In 2024, SMIC's 500 million bond was even recognized as the best bond corporate in the Philippines, which is a clear sign of strong investor confidence and solid credit rating. For investors, SMICs offer for something for everyone. Its bonds are ideal for those who prefer steady, reliable income, while its stocks attract investors looking for higher long-term returns through dividends and capital appreciations. By balancing both of financing, SMIC maintains flexibility and continues to build its reputations as one of the most trusted companies in the Philippines.
How does SM attract different kinds of investors? Why would someone choose one option over the other? It depends on the risk preferences. Those who are more careful typically prefer SM bonds because they provide steady and predictable returns. On the other hand, individuals who are willing to take more risk aim for SM stocks to benefit from potential growth and higher gains.
SM Investments Corporations, or SMIC, uses a mix of stocks and bonds to keep its funding stable and flexible. Bonds attract risk-averse investors seeking steady returns, while stocks appeal to risk takers aiming for higher gains. Debt financing offers tax advantages and lower costs, but raises financial risk, whereas equity funding ensures stability without repayment obligations, though it can dilute ownership. It's a problem. So, by balancing both, SMIC manages risk effectively, sustains growth, and maintains financial resilience.
SM investments face major challenges such as global inflation and geopolitical tensions in the West Philippine Sea, which affect the consumer spending and investment confidence. Another issue is the rise of online scams and phishing websites imitating SMIC, posing risk to its reputation and customer trust. So to address this, the SMIC focus on operational efficiency, regional expansion, and the diversify investment to maintain financial stability. So the company also worked with authorities to remove fake sites and protect its stakeholders. Despite this issue, the SM investment continues to stay resilient and adaptive, showing strong leadership and commitment to long-term growth.
How does a company stay strong when the global economy is unstable? And what do they do when scammers try to damage their reputation online? SM focuses on maintaining efficiency and expanding strategically while also continuing to diversify investments and carefully managing its finances. And when scams appear, they don't ignore them. They work with authorities to take those fake sites down and protect the public.
Custom Investment Corporation continues to navigate both global and local challenges, from geopolitical tensions in the West Philippine Sea to the impact of global inflation on consumer spending. Despite these headwinds, SMIC remains resilient, backed by its strong retail performance, efficient operations, and ongoing expansion strategies. To manage these risks, the company takes a proactive approach by diversifying its investment, expanding across regions, and maintaining a conservative financial structure. These strategies help ensure long term stability for both stockholders and bondholders. While recently SMIC had also had to address a growing issue with online scams and phishing websites, posing as the company to steal information. These scams can threaten investor confidence and tarnish the company's reputation. And in response to that, SMIC issued a public advisories and continues to work closely with authorities to take down fraudulent sites and safeguard its customers.
Thank you very much for your attention. We hope that you may have learned a thing or two about SMIC. So once again, this is the fifth group of our financial markets class, and God bless. Thank you very much.